So, announcement today, they're increasing the dividend, doubling down on oil, as we just said. What do you make of this? What's your price target for this stock? What's your rating? Did it change based on this announcement?
Yeah, so I think the overall announcement's positive, but it's probably a little bit less than what the market was looking for. On the oil side, they said they're going to hold production flat at current levels to 2030. The prior target was for a decline annually of 1 to 2%. I think the market was probably looking for a complete reversal on that and looking for growth. They are going to grow the LNG business, but that was previously in their plan as well, as they are the largest LNG producer in the world. And then we got some capex reductions, which the market always likes capital discipline, and then the increase in the shareholder return target, which brings them in line with peer Total. So I think what we saw earlier, again, was positive, but maybe not everything the market was looking for. We're going to need to see more detail later this afternoon,
Okay.
particularly around the renewable power business, which I think was the main area of investor concern. Overall, though, to answer your question, nothing changes. I think the US ADR is worth about 63, so it's about a 10% discount today. So far, I haven't seen anything that changes my mind on that.
Okay. What about the new CEO? Part of his statement is the company is going to focus on performance, discipline, and simplification. That seems to be resonating with some investors who are concerned that Shell was basically trying to move away from its core business.
Yeah, I think that was his first step, was to, implement these actions that would give confidence to investors in the market that Shell wasn't overreaching on the energy transition strategy. In 2020, they came out with a big strategic shift, including cutting the dividend. That was not well received. You can see that in the valuation of the shares since then. So I think his idea is to enforce the capital discipline, the cost control, keep the focus on the core hydrocarbon business while stepping out in areas that make sense for the energy transition. Shell's been out there taking investor meetings, talking, particularly in the U.S., to attract some interest. And I think those have been the core messages that are resonating. We're not going to abandon hydrocarbons. We're going to stay focused. And when we do spend on low carbon, it's going to make sense.
All right, let's talk more macro for a second. A new report from the IEA out this morning that global oil demand growth will start to taper off in the next few years, especially following Russia's invasion of Ukraine. The agency says consumption in 2024 will grow at half the rate we're seeing this year. What does that make you think about just the overall sector, Shell, and some of the other big names out there?
Yeah, oil demand certainly in the near term is going to slow up or slow up or speed down, just depending on what happens with the macro economy. But the fact remains that there's not a lot of viable substitutes for the uses of oil demand that we see today. Even if you look at aggressive EV adoption, you're still going to have distillate demand growth, shipping fuel demand growth, jet fuel, chemicals, et cetera. So, based off our work, even incorporating an aggressive EV demand forecast, any sort of work from home, any sort of Russian fallout, we continue to see oil demand growing through 2030 and maybe even beyond. And then certainly a very long and slow decline to 2050. So, we think ultimately—
1 second, Alan. This is a very contrarian view. I think a lot of people think oil demand is going to taper off, maybe not next year like this report says, but certainly in the next few years. What's giving you so much confidence? You mentioned jet fuel and things like that, but EV adoption is certainly on the rise.
Yeah, it certainly is. And we have a very aggressive EV forecast as well. Our team that works on EV forecasts anticipates immense growth in EVs. But frankly, it takes a long time for the car fleet to turn over. We're talking about sales rates, not the penetration to the car fleet. So, this is going to take a lot of time before EVs start to make a meaningful impact. Meanwhile, you continue to have strong growth in emerging markets. You don't have viable substitutes for jet fuel. You don't have viable substitutes for distillate at this point. You may at some point get electrification of heavy-duty trucks, but that's a long way off as well. So, the underlying fundamentals, when you look at the uses of oil, you just don't have the available substitutes today that would suggest that oil demand is going to fall off dramatically anytime soon.